My next guest is also bullish on the market. Says really look like we're in pretty good shape as we head into 2026. Let's bring in UBS Private Wealth Management, their managing director, Alli McCartney. And Alli, first, just want to get your thoughts. And my notes, it looks like I can't even make out my own notes. A lot of changes, but it looks like they went back to a lot of their June assumptions with respect to the economy next year. Although GDP 2.3 in June is 1.6, last time in September is 1.8. So they're essentially saying the economy is going to pick up steam.
So I don't think there are a ton of surprises here. I think we expected, whether we were talking about descents on either side or whether we were talking about ranges for 2026 and 27, to have a pretty big range. I mean, you see out there a 2 to 4% range in terms of the target rate for interest rates. And I think, we believe as well that you've seen GDP pick up in the fourth quarter, right, and that a lot of the things that your last guest was talking about that are going to catalyze earnings into 2026, a lot of accounting practices in the big, beautiful bill are going to keep that going.
So with solid earnings growth, you see corporate earnings growth re-accelerating?
We've actually taken our numbers up. So we see we're going to end out about 15% this year. We think we'll see 13% next year.
Okay. We talked about economic growth.
Yep.
Fed cuts play a role. Tariff anxiety, that starts to really fade away. No one really too much is talking about that anymore. And I guess the fiscal stimulus part, the big, beautiful bill.
The fiscal stimulus is real, right? It's possible that what we will see is, in a sense, withholdings go down, which is the equivalent of a check go into individuals' pockets. And the consumers, we've seen how strongly the behavior has been in the lead up to the holiday season. So when you look at that, when you look at some of the things going on in specific markets, financials have about 10 to 12% of reserves they can put back. There's going to be a lot of, as he said, money sloshing around. I
love your note when you sort of said it's expensive but not overvalued.
Yeah.
Okay. Yeah. So everything here in the red, folks, is like compared to history from an absolute basis, the percentile, right? So red means overvalued or expensive, but you say in the context of where we are, that shouldn't deter investors.
You have to change the context when you have inflection points in global technology. So it is certainly true that we have gotten to a place as a dual result of both innovation, American sort of centric investing, and more money in the system for longer than we've ever seen. But every time we've seen, whether it's telecom, the steam engine, the internet, multiples go and they come out at a new plateau. And I think that AI, having spent 4 days at the UBS AI conference last week, I don't even think we've scratched the surface of what we're going to see.
So we got technology, and we could put slash here, right? Communication, comm services as well, right? So you got those, healthcare, financials. Would you be equally weight these? I know these are sectors your firm finds attractive right now.
So I personally am a lot here. I think there's a lot to go here, whether it's the M&A story or whether it's the tailwinds of lower interest rates, decreased regulatory hurdles, and increased activity. I also think emerging markets, which has just been beaten down for years and years.
We actually should have had like maybe a 5-year chart on this, because
or a 10-year chart.
Or 10-year chart, because this would be a blip. If we had a 10-year chart, this thing would be just right here. This chart would be like that. So you're saying this has a lot more room. Don't think that you've missed this move. You still like emerging markets.
At all. I think we have a major cycle coming in emerging markets. We're going to continue to have dollar declining.
Right.
It's definitely the time to get into technology, and the EM indices are largely technologically driven. China, Hong Kong. Think about places like Brazil and Mexico and all the tailwinds that exist there. And again, we need diversification somewhere, and we haven't been getting it in a lot of places. But the crazy part I'll add to this is that I've had 100% gains in my portfolios with silver, gold, palladium. I think there's more there for the same reasons that there is in EM.
See you in a little while
with
the panel. Wow, it's going to be a crazy day. I can't wait for this Q&A.